Thank you for being here today and welcome back to my channel. I'm so excited you join me for this important and empowering conversation about a mortgage solution that's changing the game for homeowners aged 55 and older. My name is Raman Saini, and I'm a licensed mortgage agent with over 5 years of experience helping Canadians make confident decisions about their homes and finances, especially when it comes to navigating options that go beyond the traditional mortgage. My specialty is alternative lending, and today I'll be walking you through something called a no payment mortgage, or also known as a reverse mortgage. It is a powerful tool that can help you unlock the equity in your home without selling or downsizing, and most importantly, without making monthly mortgage payments. Whether you're retired, nearing retirement, or an adult child simply planning ahead for their parents, this session is designed to give you clear, no pressure information to help you make the best decision for you and your family. So grab a pen, relax, and let's dive in. Let me just share my screen for my presentation. Perfect. So, no payment mortgage seminar hosted by me, Raman Saini. Hi, I'm Raman. I'm a mortgage agent for 5 years, specializing in alternative lending for homeowners across Canada. And if you have any questions, feel free to leave me a comment below. I'd be happy to answer any of your questions. Today's topics for today's discussion are no payment mortgage basics, benefits and risks, common myths, financial planning, how to get started, real life, happy clients, common questions, and book a call with me. The no payment mortgage basics. A no payment mortgage is also known as a reverse mortgage, and it is a secured mortgage loan designed for homeowners aged 55 and older in Canada. Unlike conventional mortgages, Canadians with a reverse mortgage have no monthly mortgage payments, like I mentioned before. Who qualifies? To qualify, you need to meet a few key criterias, be at least 55 years or older in Canada, own your home outright or have significant equity, and the home is your primary residence. Now, how does it differ from a traditional mortgage? A reverse mortgage lets you borrow against the value of your home without monthly payments, and it's a great way to unlock equity while staying in your home and not worrying about how to make ends meet, especially in the years of your retirement. Myths of a no payment mortgage. You lose ownership of your home. You remain the owner until all owners of the property pass away or you sell your home. So if you or your partner passes away, the home will still be yours, so you can have that peace of mind. This is for seniors in financial trouble. No payment mortgages are a financial tool being utilized by homeowners who want to optimize their income, delay drawing on investments, and fund life goals. So this is not for someone who is in financial trouble. You can owe more than your home is worth. As these are considered non-recourse mortgages, you or your heirs will never owe more than what your home is worth, and it never goes into negative equity, and that's a guarantee. You can't leave your home to your children. You can leave your home to your children if you'd like. You are free to do whatever you like with the property while it is under your ownership. So nothing changes unless someone else buys that property out. Benefits of a no payment mortgage: access tax-free cash. This is a game changer if you're retired and living on fixed income. Imagine having extra money to cover everyday expenses, travel, or emergencies without dipping into your savings, and paying off debts preserving your investments. So not having to dip into those investments also has tax benefits to you, so you don't end up paying more to the government. No monthly mortgage payments. Eliminate the need to make a monthly mortgage payment, freeing up your income for other priorities, such as healthcare, home maintenance, and enjoying your retirement years. And stay in your home longer. Enjoy your family home until you're ready to part from it. Sometimes Canadians actually put off retirement because they're afraid that they will not be able to make their monthly mortgage payment every month. Now, no payment mortgages allow you to stay in your home as long as you want, and you don't have to pay a mortgage every month with a reverse mortgage. The risks of a no payment mortgage, the impact on your family. Now, leaving your home to your kids and family, if that's a priority for you, the no payment mortgage must be repaid before they can take ownership. So, ensuring that they meet mortgage requirements and qualifications is imperative. So, if you decide to get a no payment mortgage and you want to leave your kids your home, the best thing to do is have them start getting pre qualified for the amount that they will need to pay off to buy your home. And that will be a really good idea to start early and get them set up for the right time. And that way, there will be no hassle in getting them to take ownership of your home. Failing to meet mortgage terms. Keeping up with property taxes and home insurance is key to avoid foreclosure of the home. Best way to do this is to pay your property taxes on a monthly basis and ensure home insurance is in place without lapsing. No payment mortgages for financial planning. Reverse mortgages aren't just loans, they're a strategic financial planning tool. And I know a lot of seniors who use it for that benefit. The first benefit is delaying CPP payments. A reverse mortgage can provide a financial cushion by tapping into equity in your home, allowing you to maximize your CPP and old age security benefits. By waiting, you can increase the amount you receive later, which would make a big difference in your long-term financial health. For every year you delay, you're receiving your CPP after age 65, your monthly payment increases by 0.7% per month or 8.4% annually. That means retirees can boost their CPP by 42% by delaying their benefits from age 65 to age 70. So if your payments are $816 per month at age 65, by age 70, you'll be receiving $1,079 per month. This can also reduce the risk of outliving your retirement savings too early and provide peace of mind and financial stability as you grow older. Choosing to delay your CPP may lead to also tax benefits, as higher monthly payments in your 70s and beyond may be offset by lower overall income later in your retirement years. And we all love to see tax benefits when it's time to file our taxes. Another one of these financial tools is a no payment mortgage versus HELOCs. Many people wonder, why not just get a HELOC instead? HELOCs are home equity lines of credits. They are usually lower interest than getting a personal loan and allow you to borrow against your home equity, just like a reverse mortgage. The reason why no payment mortgages are better is because HELOCs, if you use them, require monthly payments, which can strain your retirement budget. Let's say you qualify for a $100,000 HELOC and you use $50,000 for medical expenses or renovations. You would still have to make payments on that HELOC and a first mortgage if you have one in place. This could really add up as time goes on. If interest rates go up, they can really eat up your budgets because HELOCs are on a variable rate. So if the Bank of Canada increases the overnight rate every time they meet, the prime rate will increase and so will the payments on your HELOC. This would not allow someone with a fixed income to balance their budget as effectively as someone who has a no payment mortgage, giving them more breathing room financially. And that's what we want when we retire. Now, another financial tool, downsizing versus reverse mortgages. Now, downsizing is another common option for retired Canadians. The home that you may be living in, you may have bought that home because you had a family to raise. But as you get older and you're empty nesters, let's say, downsizing might be the best option. But maybe you don't want to sell in this kind of market as of right now, where home values are not where they used to be. And maybe you just don't want the hassle of parting with your home as well. While selling your home and moving to a smaller can free up equity, it also comes with costs like moving expenses, real estate commissions, and the emotional toll of leaving your home, the home that you raised your family in. No payment mortgages let you stay put while still accessing the next steps at a more leisurely pace. So you don't feel rushed as to making that decision. You could take a few years to enjoy your retirement as well. Now, how to get started. The first step in this process would be to submit an application. And once the application is submitted, we will be ordering an appraisal to get the value of your home in today's market. Once that appraisal comes in and the value of your property is great, and we are able to pay out the mortgages on your home as well as any debts that you have, and a commitment is issued for you to sign. Once a commitment is issued, the lawyers are instructed for the closing. Now, one benefit I want to make sure that you understand is there are no costs associated for this mortgage to you directly. Everything that you will be paying for will come out of the mortgage itself. The appraisal is not out of your pocket. The commitment is not out of your pocket. And the lawyer fees are not out of your pocket. Our lenders will be paying that out for you. Even if the appraisal comes in short, and there's not enough funds, you have no obligation to move forward as well. And they will not ask you to pay for that appraisal either. So it's always a good idea to check this out and see if this is a benefit to you. Now, I'd like to share with you some real life happy clients that have gotten a reverse mortgage and the benefits it's provided for them. Retired couple, DD and MD, let's call them, came to me with high interest debts and a mortgage. They were also supporting a disabled adult son on their retirement income. With the help of a no payment mortgage, we were able to pay out the debts and the current mortgage on their home, saving them a lot of stress of providing for their family. Now they can retire better. They owned a home that is worth over $700,000. They had a mortgage of $170,000 along with some high interest debts totaling $40,000 that had accumulated to help take care of their son. Now, using the equity in their home, we were able to get them a reverse mortgage to pay off the $170,000 and the debt, eliminating monthly payments to the mortgage and the credit card, saving them over $3,000 per month. Now, that is a benefit I see them enjoying for a long time. A few FAQs that are normal that I hear all the time. The first one, will the bank own the home? Can the bank force the homeowner to sell or foreclose anytime? So these two questions, because they're related to the bank, I will answer them together. The bank does not own the home. The home is under your name and remains under your name as long as you're paying the property taxes and maintaining the home insurance. Can the bank force the homeowner to sell or foreclose? No. Not until you are ready to sell, either you or your spouse or partner has passed away, or your kids are ready to take it over. Foreclosure will only happen if you have not maintained your property taxes as well as your home insurance. With a reverse mortgage, will the homeowner owe more than their house is worth? That is not the case at all. The home will never be in negative equity, as well as the amount owing will never exceed the value of the home. Another question I always hear, are reverse mortgages too expensive because the rates are high? That's not the case at all, because if you were to get the home equity line of credit or a second mortgage, those rates are higher and you would still have to make payments on them every single month. So that would be something that you are responsible for. With a reverse mortgage, you are not going to be making any payments on any mortgage at that time. Can the homeowner still get a reverse mortgage if they have an existing mortgage? Yes, you can, because the reverse mortgage will be used to pay out the existing mortgage and pay out that debt. And then when the reverse mortgage is in place, you do not make any monthly payments on that. Isn't a home equity line of credit a better option? Like I answered before, home equity lines of credits are higher in interest, as well as a payment would be required, and they are not a tax-free cash deductible. So anything that you take out, you are still paying tax on that, and you would not be having any savings when it comes time to use the HELOC, because you would still be required to make a payment on it. aren't surviving spouses stuck with paying the loan after the homeowner passes away? I wouldn't call it stuck, but they would be required to pay off the loan once they decide that they're ready to sell. So they're not paying for it until they are ready to sell. And no spouse would need to worry about that as long as they are on the title of the mortgage. So as long as they're on the mortgage, they would not have to pay anything back. Now, what's next with this webinar? If you've stayed to the end, I'm really happy to hear that. If you're ready to explore a reverse mortgage now, I'd be happy to guide you through personalized options. Just reach out and let's chat. Looking in the description box below, you can book your discovery call with me, and it would be a 15-minute no obligation call. You can get as much information as you'd like. But if you're not quite ready yet, I get this. That's a big decision. That's why I've created a step-by-step course designed to give you all the information you need in plain English so you can feel confident before making any moves. Sign up now. The Reverse Mortgage course, it's a learn at your own pace, get your answers to the biggest questions, and feel empowered and not pressured. I want to thank you for watching with me today and getting more information on this program, because I feel like this would be really important for our aging Canadian population. If we can save money and retire better, I think this would be a wonderful option for those clients, and to have peace of mind that their property is not going anywhere as they reach retirement or are in their retirement. If you have any questions, please book a call with me below. Let me know in the comments if you are interested. Comment interested below.